Hello dear traders, I'm Anna Kasatkina back with you with another financial news release on Insta TV. On Thursday, the British currency found itself in a mixed situation. Many traders have used it for their own advantage by striking profitable deals. The opening of the European session today was overshadowed by negative data released for the British pound. According to the UK Office for National Statistics, the country's retail sales ticked up by a mere 0.1% last month compared to June, while in annual terms, the value increased by 4.2%. Economists, however, had expected a rise of 0.4% and 4.4% accordingly. Retail sales excluding automotive fuel gained 0.4% in July against June and 4.3% as compared to the previous year, which was in line with the forecast. And it is believed that the current low inflation rate and a wage rise amid a surge in the residential housing market result in more robust consumer spending. Following the release, the British pound managed to overcome the pressure from sellers, but the next round of sell-offs knocked it out and forced to retreat.
Lower than expected retail sales caused the British pound to lose ground after climbing on the inflation data. Still, the cable is likely to trim some losses later in the day amid expectations of lower existing home sales in the US. The British currency will then go up to 1.5650.
Apart from expectations of yet another disappointment from the US Statistical Bureau, the pound was supported by the industrial order report compiled by the Confederation of British Industry. During August, the value experienced a substantial correction, rising from -10 to -1. Economists did not expect any changes at all. Such data raises hopes among investors that the UK industry might be returning to its stable recovery path. Therefore, this release helped the British pound to reverse, as traders were buying up more of the currency. Moreover, investors have also taken into account the recent comment made by a member of the Bank of England's Monetary Policy Committee. The Bank of England policymaker David Miles believes that the regulator is now pretty close to a key rate hike, which will confirm the strength of the country's economy. The turning point in the UK monetary policy, he believes, will come very soon. However, Miles argues while the British Central Bank is presently on its way to this landmark, it is not there yet. It is worth noting that the UK GDP is growing by 0.7% on average in the second half of 2015, while over the first 6 months of the year the economy was only expanding by 0.4%. The inflation rate in the United Kingdom still fails to reach the target level, staying below 2%. According to David Miles, inflation is set to increase slowly, which is why the interest rate hike will also be gradual. At the same time, there are no alarming signs of inflation breaking out of control. This was Daily Financial News. Keep in touch with us. Goodbye.